So that's a look at some major markets we track here on Business Morning. So let's move our focus and turn our attention to our topic for the day. We're going to be talking about the Nigeria Sovereign Investment Authority and latest developments that have come up in that agency, and being joined by the Managing Director, Chief Executive Officer of the Nigeria Sovereign Investment Authority, Uche Orji. Good morning. Thank you so much for coming in.
Thank you for having me.
Okay, so first of all, congratulations. You've been ranked second by an international organization.
Yes.
Yeah, so tell us how the NSIA actually achieved this.
Well, I was pleasantly surprised, as maybe you were as well, with the rating. It's one of the metrics we care about. It's a transparency rating that looks at a whole bunch of things. And I think for us, the most important development was also the level of disclosure in our annual report, which we put on our website and published a few months ago. And I think that in many ways explained the strategy of the NSIA clearly to a lot of people. But also, I think relative to most other people, we've been very open about where we invest, how we invest. And most of that was clearly articulated in the report that went out. And I think in many ways that was one of the reasons that we were able to, on a relative basis, achieve such a high level of ranking, 9 out of 10. But also, I think we have also been clear. The law that sets up the NSIA was very clear about the funds that we run. There are 3 funds. There's a stabilization fund, there's a future generations fund, and there's an infrastructure fund. And we also went on beyond the law to publish our investment policy statements, which defines how we invest each of the 3 funds, what level of returns we're targeting. And I think all of those things were clearer than most of our peers, I believe. And I think that in a short period of time, within 20 months of being established, NSIA was able to be ranked so highly. But that is one thing. There are other things also we care about in terms of how we measure performance.
So let's talk about your report,
sure,
which showed that there was a profit of 1.2 billion naira
in the first quarter, and that second quarter we just finished that as well. We did slightly better than 1.2 again in the second quarter. So altogether, yes. So I mean, these are quarterly reports, and we're in the market business. There'll be points when things will not be so great as well. But we've been quite happy with some of the performance we've seen.
Sorry to cut you here, but then you see, some people actually feel that the reason really isn't a lot of transparency in how some of these reports are, actually put out. Because, for instance, they feel that you can cook the books just to make your investors or the general public feel that things are okay.
No, these are audited reports.
Okay.
So I think, and I used to be an analyst. I was an investment. I was a banker for many years, both here in Nigeria and in many places. And I think people shouldn't do that. But I don't think. I think that's a very interesting choice of word. But no, obviously not. There are 2 reasons why in our business it's difficult to do that. Number one is we have custodians who have our assets, and these are independent custodians. And these numbers are verified with the custodians. We have 2 custodians that we use. We use JP Morgan globally, and we use Stanbic IBTC. So whatever you say in your numbers, at the end of the day, cash flow does not lie. You can always go to the custodian and verify the cash flow. And that's the first port of call for the auditors in terms of how the numbers are looked at. Now, the rest is a matter of strategy. You can discuss how you're investing and what you're investing. But I think in terms of the books are as clear as they can be. At the end of the day, it's a pool of funds, and it's either the funds are there or they're not there. You can verify that.
Okay, so let's go back to the ranking.
Sure.
Nigeria was ranked alongside the US, France, South Korea, Brazil, and Malaysia.
Sure.
In fact, we're actually the only African sovereign wealth fund that was so ranked. Why do you think that happened? What happened to the other African countries with the
Well, I think people run their businesses the way they choose to. Frankly, for us at NSIA, we're very surprised by all of the level of interest in the conversation about the ranking. We just don't know how to do things any other way, right? I mean, it's very simple. You say what you're going to do and you do it. We were very clear that, look, it's going to take us some time on the infrastructure side to start making investments. This was one of my first statements. Because the kind of investments we want to make on infrastructure, some of them are developmental, most of them are developmental. And if you take Second Niger Bridge, for example, that's going to take 4 years. That's the first commitment we've made. There are a few others that we've also made in agriculture and a few other places. But we're also very clear when we announced our first set of managers. Although from then we've gone on to hire 19 other managers, which are explicitly stated in our annual report. So there are various strategies. We pick managers for those strategies. And I can explain also why we went about it that way in a minute. But I think that not everybody out there goes out and tells you, I've chosen this manager, I've dropped this manager and all that. We do that.
Now, let's look at the three funds that you mentioned. We have the Industrialization Fund, the Stabilization Fund, and the Future Generation Fund.
Yeah.
So, like...
The Infrastructure Fund, not Industrialization.
Sorry, Infrastructure Fund.
Sure.
Now, for the second Niger Bridge, was it taken from the...
Infrastructure Fund.
Infrastructure Fund.
Infrastructure Fund, that's right.
Okay. Well, apart from the second Niger Bridge, are there other commitments that the Nigeria Sovereign Investment Authority is working on?
Oh yes, we made a commitment to an agriculture fund at the end of last year, which was actually our first investment, small investment, but it's to a fund manager who is then going to go ahead and invest in shared infrastructure for agriculture companies. We made that commitment and we funded it. We also invested in the mortgage refinancing company. And the interesting thing about that is for us, again, these are all security instruments aimed at helping develop the housing market and the mortgage market. We made that, we had the biggest shareholder, I believe, in that company, and we made that commitment. That also came from our infrastructure fund. We have signed 8 MOUs with various teaching hospitals and federal medical centers, and 4 of those will be active this year, I believe, in healthcare, ranging from, fairly substantial size health center that we're discussing with a potential investor to a few other smaller commitments in healthcare. Power has been slower for us, and the reason is because we came into power just as the privatization program was concluding. And so many positions have been taken in power, but there are a few things also in power that we're looking at. So there are 5 sectors we wanted to start with in the infrastructure fund. And these are motorways, which is second Niger. There are 2 others we've been public about our interest in Lagos-Ibadan Expressway. That is going through its advisory process, and when it's time for us to write that check, we will. Second one is real estate, starting with a mortgage financing investments, and there are some direct real estate investments we're looking at for affordable housing. Then there's agriculture, which I've talked about. We invested. There's healthcare, and so motorways, healthcare, power, agriculture are some of the ones where we decided to start with.
What about manufacturing? Because we have a very high rate of unemployment.
That's correct.
And when we just finished the World Economic Forum on Africa, and the focus on it was job creation and financial inclusion.
Inclusive growth, that's
inclusive growth. So as much as possible, we want to see the economy expand.
That is correct.
You've called sectors that, yes, they are key sectors, and we see the need to have employment grow in those sectors, but they will also have to see employment grow in manufacturing as well. And it's not among the sectors that you've mentioned.
No, absolutely. I mean, first of all, let's start with the fact that the fund size is in a huge amount. Okay.
The fund size we're talking about is $1 billion.
Of which 20% minimum in each of the 3 funds, first of all, and then there's 40% which we can distribute based on the decision made by the board and the management. And so what we have put in the infrastructure fund is 40%, so that's $400 million. You cannot solve all problems at once. Over time, you will. We have a 5-year rolling plan that includes 15 sectors in infrastructure, including what you describe as industrial infrastructure, including free trade zones, including water resources, including refining. So there's all sorts of things there. Distribution, we have an elaborate plan. There's a 5-year rolling plan. We're looking at quite a few sectors. I believe that there are 4 things that guide our investment choices. Number 1 is it a national priority? And the 15 sectors I mentioned are national priority. Number 2, can we attract private sector co-investors? Number 3, can we make a reasonable level of return? And number 4, and more importantly, is the regulatory and legal environment conducive for external investors. These 4 factors have driven the choices we made, and there are 15 sectors we've outlined. It's also in our report. However, we have to start somewhere, because if you decide to take on all 15 sectors at once, you're going to make no impact. You end up with tokenism. A little bit of money here, a little bit of money there, you make no impact at all. So we decided to choose 5, and the 5 we chose are the ones I mentioned that we're going to start with. But over time, and hopefully over 5 years, as more money is put into the fund, we can expand our reach.